With 2026 around the corner and stock markets becoming more uncertain every single day, a common question that I get asked is, what ETFs should be on my radar? What ETFs should I be looking at? What ETFs should I be tracking that could be a good fit for my portfolio to have a great year? An ETF is essentially buying the packet of Haribos rather than buying one Haribo, meaning a stock. So you'll get a basket of stocks, maybe focused on a specific sector or industry, and you can purchase the whole packet. That is your ETF. Now, for context, for those of you that are new here, welcome to the channel. My name's Kai and I've been investing for just under 2 years consistently every single month, and I've grown a portfolio from £1,500 just below 40k as we are recording this video at the moment, and I've documented the whole thing, the ups, the downs, the wins, the losses, and my overall strategies going into every single month. And at the heart of those strategies are ETFs. It's a fantastic way to be diversified into specific markets, as you're not purchasing and leaving yourself exposed to one single stock. You have the ability to purchase and get involved into different companies without having to go through the expense fees that come with buying one company, as you will just put aside expenses for the fund itself. Now, in today's video, we're going to be talking about the top 3 ETFs that you don't want to miss out on going into 2026, why they are on my radar, and the risks that come with each individual ETF. Firstly, we have the SOX ETF. This is an ETF that tracks top performing semiconductor companies based in the US, and unless you've been living under a rock, we know that AI and tech is at the heart of everything that we do. So having exposure to an ETF like this can give you access to the gains that we're seeing in companies like Nvidia, ASML for example, without being exposed to one specific company. Now you're probably thinking, Kai, but aren't these ETFs quite volatile? Do they go up and down a lot? And absolutely, these are high growth sectors, so naturally being exposed to an ETF like this, one of the risks are high volatility, and something you have to ask yourself is, can you stomach that volatility moving long term? But with an ETF like this, the numbers really do speak for themselves. As we can see, like, we've had 44% returns back in 2021, 67% returns back in 2023, and the ETF holds over $15 billion worth of assets, so it's very liquid, so you can get in and out of positions very quickly. Now, this ETF only has 30 companies situated within it, and it's mainly focused on obviously semiconductors and also semiconductor equipment too, which is great. And when you think about the benchmark of the S&P, it does outperform it on a much larger scale, but that comes with the risks as well. Now, for the next ETF, this is a relatively new ETF on the market, and it's the IBIT ETF, also by BlackRock. This ETF is essentially designed to mirror the spot price of Bitcoin. So all it's doing is tracking the real price of Bitcoin. For example, if you was to buy this ETF, you wouldn't own the actual Bitcoin itself. You're essentially giving money to the asset manager, so BlackRock, who will buy the Bitcoin and hold it as custody, which does have its advantages for people like you and I who are retail investors, as we don't have to worry about how the Bitcoin is held. For example, we don't have to use cold wallets if we was to buy this ETF. Now, I have a cold wallet and I pretty much hold custody of my own Bitcoin, because it is much cheaper to do that long term, because you don't have to pay any fees when doing it, only a small fee to the crypto provider, whereas something like IBIT, you will have to pay a slightly higher fee for the provider to store the coins, even though you won't own them if you was to buy them through IBIT. Now, obviously, as this ETF is tracking Bitcoin, it is sensitive to any news around crypto, and you will experience the volatility that comes with a normal Bitcoin. Large macro shifts and even things to do with geopolitics, everything like that can definitely impact this ETF, but it does have its positives as well. As you know, Bitcoin has been a top performing asset class in recent years, although it's been a bumpy ride if you're holding the coin. Now, the final ETF that has been on my radar for a while now is the Global Metals and Mining ETF. This tracks an index of global metals and mining companies that are based and focused on producing metals such as copper, aluminium, steel and nickel, but they exclude metals such as gold and silver. This is because this ETF is focused on the global industrial and metals demand. Now, I like the fact that this ETF is global, meaning there is exposure to emerging markets, countries like Brazil, for example, because let's face it, a lot of these countries do have lots and lots of natural resources and reserves, and this ETF will be looking at the industrialization of these mines as well. So anything that has a tech, for example, stance when looking at extracting metals, you will see the benefits of that within this ETF. And when you're looking at industries like the broader tech sector, the AI space, they all need minerals and natural resources to be able to be built within their products, right? Otherwise, these AI giants just won't exist. It really is the lifeblood of the tech space when you really think about it. Now, this ETF holds around 200 companies and will obviously rebalance, and it is also heavily weighed towards the larger caps, as they will take majority of the share within this ETF, which is good from a diversification point of view, because you want to see those gains, which will naturally come with just larger companies. Now, there is big risk when investing in an ETF that is so focused on industrials and production, mainly cyclical factors, as mining stocks will fluctuate depending upon the supply and demand for that specific material. Not only that, all this geopolitical uncertainty will affect mining companies and will affect trade, etc., which will have an effect on the broader industry. Now, don't get me wrong, there are so many different ETFs to choose from, but it's so important that you do your own research, as again, I'm not a financial advisor by any means. This is just what I'm looking at going into next year. But it's important to note that things change over time, and as we see tech naturally go on an uptrend, there will be more demand for things like semiconductors. But it all depends on your risk appetite and your ability to stomach the volatility that naturally comes with investing in specific products like these. But let me know your thoughts. Let me know what ETF you found favorable, and what ETFs that you will choose on your radar. So if you like the video, give me a like and let me know your thoughts. See you on the next one.